Morning, this is Andrew, and I'm going to talk about long-term holdings. You can have different portfolios in your stock accounts, um, and basically, we have a trading account. We trade commodities. I trade stocks, and that's in the IRA account. And then also you can have a long-term holdings account. And the idea of long-term holdings, you take a step back, you can really generate some long-term returns. And what we do is very simple ideas. We have a small portfolio of ideas that we understand, we use, let's say within our core competency. Let's say Facebook. It's not just Facebook, it's Instagram, it's WhatsApp. This is like my wife's kind of idea. And we use long-term moving averages. As you can see, I have a 10, a 20, and a 40. When the 10 is above the 20 and it's above the 40, you're 100% long. You really would have been long pretty much from here. And then you had a crossover. And whenever you get down to a 200-period exponential moving average, those are opportunities to enter or to add to your position if you so deem. I mean, first of all, none of this is any personal information. It's what our thoughts are and what we're doing and thinking. But when you get down and you have a crossover, like here, you could have bought. Would have been a perfect entry. And you would have been, again, and you can scale in. You might go 50% initially when you have a crossover, when the 10 is greater than the 20, and then scale up again 30% when you move up 2%, or 30% or 30% initially, and then another 20% when it moves up 4% thereafter. But what I wanted to say is the power of this. You have these massive moves, but then you're going to have some, it's also going to avoid this ugly stuff you can see. And then you're available for these big moves here, and you avoid the uglies. But these are the things that we'll look at. None of it's rocket science. It's all stuff that you know. Like here's Google. And if you can go back to Google, and Google is very interesting. I mean, the long-term holding, you would have been buying again here. You would have been taken out, but you would have been going from around the 1350, 60 range, and you do nothing once a week. Once a week, you look at this whatever you want to call it, every Sunday. You don't have to break your head doing this. And let's do Netflix. I mean, pretty much everybody in the world knows Netflix. And again, and here's an opportunity where you had this big sell-off, could have gotten in and just held. You have to kind of detract from the noise. And then what we do is we also look at Investor Business Daily, and you do stock checks to see the strongest ones. And you might even want to make a bigger allocation on the ones that are more, let's say, strong. I'll give you another one that we look at. Okay, what's happening here? This is what also happened here is it never really got taken out during the crisis because this is like the idea is you want consistent earnings, consistent stocks, long-term growth. I mean, look at this. I mean, this is mind-boggling. You would have gotten in here and you would have been pretty much, you scaled out a little bit, get back in, and you stay in. And even now, you'd be basically, because the 50 is underneath the 100 if you're looking at the dailies. But if you wanted to start the position, this is another way to start the position. Like you could have started here or here. Give you another one that we look at. And none of it, again, is rocket science. Nice long move from 71, 100% move. You had a little bit of a pullback. Another one. Well, actually, you can, again, depending on your own rules, this could be a buy. Once you're above the 50, it's just an entry. You had a nice pullback. You went from a high of 573 all the way down, which was rather ugly, down to 478. And now you pull back. Shook out some holders here. I mean, again, how about Adobe with their nice subscription service? Okay? And Adobe, you're below the 200. You're not involved. You're going to wait until it actually takes out the 50 again and starts to rebound. But you still have this amazing move from here. And this is if you look at this long term, this is the idea here. Just consistent mover. I mean, 10 times in your money, shocking. This is the power of long-term holding. How about Microsoft, another subscription service? Just people keep on paying. And here's your entry again. And you would never really just ride it. Once a week you look at it, rather painless. Or let's do, what else do we have here? PayPal. And you don't have too many of them. I believe we have something like 15 of them. And there's a greater weighting on the ones that are stronger. And basically what we do is with Investor Business Daily, you can rank them. You rank the stocks by, again, it's fundamentally, and then this is technical. I mean, all of these are very strong fundamentally with earnings and consistent earnings. And again, we like subscription services like Intuit's another one. And again, look at this, just long term. And what we do is there are going to be some ugly periods. That's why when you're below the 200 and you have these crossovers, you exit because you never know how bad it really can get. So my idea is to try to educate you, to help you to take different perspectives. There's no silver bullet with anything. We do property. I trade commodities. My wife does the properties. And the idea with the stocks, there's long-term stocks, there's short-term trading. My son also is involved in this. This is what it's about, is trying to be available and diversified and having a plan. And our plan is very simple because only simple ideas will work. And I'll just show you again. You have a 10-week, a 20-week, and a 40-week. If the 10-week is greater than the 20-week and above the 40-week, you're 100% invested. If the 10 is below the 20-week, you're 50% invested. If they're both below the 40-week, hello, you're out. This is what simple ideas help the power of compounding. So again, this is my site. It's educational. I wrote 2 books, just trying to help you become better investors and traders. Thank you.